Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Yesterday we had a strong continuation from the Friday's move with yet another gap to the upside. So that immediately creates change on the larger time frame as we extended to new all-time highs. Number one, extending from the previous month high, and number two, we immediately trade above the previous week's range. Now on the daily, you see that the market has been trending up, doing a little bit of backing and filling, consolidation, extension, backing and filling, extension, consolidation, extension. But now, the last three sessions after the FOMC, it seems to be an acceleration to the upside. And now it seems, it could be, and this is the difficult part to assess, that the market is getting a little bit ahead of itself by moving this sharply. The reason I say this is if you look at the market profile, you see a lot of short-term money involved. You see the amount of weak and poor highs and lows is tremendous. And you can see on Friday you have an incomplete auction on both sides, and you see a lot of like mechanically traded references. So what I think there's a disconnection, because when you have a market moving this sharply in one time frame, so basically you gap move, gap move, gap move, there's no relief on that move, but at the same time you find it hesitating and doing a lot of mechanical trading instead of following the same fashion, which would be open and drive, open and trend with conviction. You don't see that. So there's a chance that yes, we're still at these all-time highs and we are accepting them, but there's a chance that the market could be getting a little bit too low. Having said that, yesterday we held the gains for most of the session despite a continuous effort to bring the price down. That was not realized, and at the end you had a flush down which was immediately reversed back, and you have an incomplete auction to the downside, suggesting that the market could go back there and double check that reference, which is the border of the standing gap that we have up here. Overnight so far, we have a kind of a balanced inventory for the time being. There's still a couple of hours to go, but you have a very prominent POC very close to the settlement from yesterday, and so when you have that prominent POC near an important reference, that definitely should be the focus for the open. If this hesitation that I'm seeing in the market is something real, let's say that you open back around half back or below that prominent POC, if you fail to revisit that reference, that will be an indication of market weakness. On the other hand, it's likely that you will revisit it, and the focus will be on what happens at yesterday's high. Do we get an extension, and do we get acceptance above that? If we get acceptance above that, the next logical step would be to extend on the overnight high. So you have a lot of things that would indicate one way or the other, but the good thing is that you can assess the market reaction at these references or after these references are taken, and really make an assessment if the move is real or not by the way it extends or the way it accepts. So yeah, wrapping up, I would say that the focus for today is relative to Monday's value. If you don't visit this prominent POC area that exposed market weakness, that doesn't mean that if you visit it, the market is strong. I think that there's a good case for saying that the market needs a correction. You have 4 standing gaps, and the last couple of sessions have some mechanically traded references in big amounts. So we need to pay attention to that. Any sign of hesitation in the larger time frame trend would see yesterday's low taken, and the focus will be on what happens on that gap. So immediate focus at the open in overnight inventory seems balanced unless we have further extensions in the next 2 hours. But let's focus on value development relative to Monday's value, and let's pay attention to that prominent POC and settlement area to see if the market goes there, validates, or it doesn't go at all.